Right. Welcome, guys. Good afternoon. So we are 10 minutes out from CPI. Yeah, it's going to be a big print. Um, yeah, we should be expecting decent movement in the market. So let me just get the links out to both of the channels. Telegram. There we go. And we got. Yeah. Right, beautiful. So we've widened our stops on our long-term shorts just because, anything can happen on this print, really. Forecast is 6.5 down from 7.1. Core CPI forecast 5.7 down from 6. Okay. So if we do in fact get those prints coming out, yeah, you're probably going to see a little bit of a run up. I'll say a little bit, could be a little bit, could be a large bit. Last night, obviously, we got a strong move. Well, past the resistance level that we thought things were going to kind of struggle a little bit, which was this one here, that 100, so we can get rid of those. We are at the top of the order block, range, previous support. So this is where there's definitely stronger resistance, right? But I mean, it has kind of been soaked up. So yeah, let's see how things kind of play out here. Could be the case that we push straight to this 200 on the daily. So yeah, keep an eye on things. Could also just be the case that we just get an overextension, load of supply dumps, and then just a very fast move back down. Again, it really does depend on that CPI print. If we get a CPI print that comes in lower than the forecast, then yeah, I mean we're getting a rally or a continuation of the rally anyway. Dollar index opened up bearish, pushed right, passed through that structure as you can see, almost creating a double bottom sort of scenario here. So we'll see whether we break, come down into the zone, or we push up. But yeah, obviously we're kind of at this previous level of support, so CPI could just break through, tap in, and then see a bounce. So again, it could be a very, 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 very quick, fast-paced move up. As CPI gets released, okay, yes, it's come down again. Dollar index makes that fall, taps into all of this liquidity here, then sees that spark, that spring action, and prices kind of rebound from there. And then on Bitcoin, prices shoot up and then find resistance and then just plummet down. So yeah, let's see how things kind of play out here. It might be the case, I mean, if things move really fast, obviously we're going to give it at least 15 minutes, 15 to 30 minutes for the markets to digest whatever comes out, and then see whether we can get an opportunity. But even in the last CPI print, I mean, things just shot up, shot down, structured, and continued pushing up. So yeah, kind of a little bit of indecisiveness. So we'll see. Oh, I can't have the music on. Got some news in the background. Unfortunately, copyrights don't allow you to play music. Oh, no, wrong one. But yeah, guys, those that are joining us, welcome, welcome, welcome. Let's see what we can get here. Hopefully we can get a nice move and see what we can get in on some trades. We've already got some in the pipeline ready to go short, okay, not to continue going long, just because we are kind of overextended on this move. So let's see what we can get. If it pushes up, we're just letting it do its thing, and then see where resistance is found, and then start looking at some shorts, just because I mean this move has done its bit. So yeah, let's see. Yeah, got some nice moves. Before the last CPI report, trading was 3 times. Things are looking bearish in the altcoin market. They've obviously had their move, and starting to make a slight turnaround. Not seeing too much green, a lot more red. So, is it ramping up for a move back up, or is it in fact switching up of sides? There was no indication of any leak, any information getting out. So how did this happen? We don't know. Out of interest, when does the administration find out about this number? We know when they find out about payrolls. What about CPI? Council of Economic Advisors gets it the night before, and they can share it with the president, which often they do. I suppose if it's good news, don't want to be the one bringing him the bad news. No. But other than that, it should not get out. The president, of course, speaks at 10 a.m. Eastern Time. Mike, this was cool. You're going to stick with us. The inflation data is about 4 minutes away. Going into it, equity futures up by 0.4% on the S&P 500. The yield's lower by 4 basis points. Your 10-year 349.49. Your inflation report up next. Right, 3 minutes. And then obviously give it half an hour, and then we get New York opening. So yeah, obviously there's a little bit of a buffer in time between the release and then New York Stock Exchange open. So we'll see the reaction that we get on crypto, on the dollar, on equities as well, just because equities are also kind of breaking point. Slightly up for the day. Russell's at resistance. S&P's also. They've all had a very nice run up. So are we continuing? Or are we in fact plummeting? So let's see what we can get here. It's going to be an interesting print, that's for sure. Right, 1 minute. Just bear in mind we also get job data, continuing jobless claims, initial jobless claims. So let's see. Get in some movement. 25 seconds. I do feel like we are just going to push up really fast and then start seeing a whole load of supply come in and then dump. But I guess we shall see. 7. Oh. Oh, oh, oh! Jesus. Okay, 6.5%. So weaker CPI came in as forecasted. Okay. And the move. That was the move there. Ooh. Right, let's have a look at what's happening here. Jesus. Is the dollar going to push right back up? That's the question. Okay. So core CPI year on year, 5.7%, came in as forecasted. Okay, 0.3 less than the previous month. Sorry, the previous year. And CPI year on year 6.5%, forecast 6.5, previous 7.1. Okay. So yeah, let's give it a little bit of time just to digest. See how they're going to react. The dollar's making, I mean, that's the spring action that we got. Bond sensitivity just above that level of support that we've been talking about. So yeah, we'll see whether things are going to turn around quick. Okay.
December numbers come in with the headline month over month change down 0.1% as forecast. The core up 0.3 as forecast, and that pushes the annual rates to 6.5% for headline, 5.7% for the CPI X food and energy. Doing the calculations here to see if I can get that housing one. I haven't got it yet, but we'll get it for you as soon as we can. The idea, the J. Powell number that everybody is looking for. Taking a look at the percent changes, it looks like food was up 0.3, which is a bit.
Nasdaq.
It's down from 0.5 the month before, but there was a thought that might go down a little bit further. Energy down 4.5%.
Okay.
Will Kennedy just left and took his gasoline prices.
This is what we want to see anyway, for prices to really start to push back down. Almost a double. Well, got that double top forming.
Natural gas was up 0.3, which is kind of interesting. That's the opposite of what we.
So let's see if we can slam it right down.
That's always. Which a bit surprising. And then
some of these are absolutely plummeting.
Which is 0.2 higher than it was the month of November. So that is an issue for the Fed, and we have just
very fast move.
Updated math done here.
What we do want to have a look is total crypto market cap. That's looking bearish. I mean, yeah.
Responding as if it was looking for a bit of a downside surprise on inflation and didn't get one. But these are early days, 22 minutes into this. We've got to look over all the numbers. The curve yields are higher by 5 basis points on a 2-year to about 427. On a 2-year,
right, does look like
points at 355.
might
We did see
push down.
Euro dollar, have a look at 108. New high this session, 108.10. I can tell you euro dollar now negative just on the daytime by about 0.1%, and now not even that.
There was a play a little bit across equities, bonds, currencies, commodities towards a more what I call benign statistic, and instead we didn't get gloom, but we got spot on statistics. We haven't seen the revisions yet. John, beneath the radar is claims Thursday, and jobless claims are just stunning 2 weeks in a row. They're not as important as inflation, but this is a low number. Is a fully employed America is a non-McKee generalization. He would never say that, but there it is. And
I'm employed, which counts as fully employed. 5,000 for initial jobless claims after 206 last week, but these are also still holiday adjusted, so we kind of give it a grain of salt, but it doesn't suggest any problem.
Do you have this key Powell statistic?
We don't have the total. We don't have the accurate one, the one that I want to use yet.
Okay.
But we do have the calculation that the BLS makes of less food, shelter, and energy, and it was down on the month by a 0.1% after a 0.1% drop last month. So it looks like no change, still going down.
See, this always happens on CPI. Last CPI, same thing happened. And then we just continued pushing right up. So, again, guys, this is why you kind of want to just watch for
No reason to think that they wouldn't at this point.
a little bit of time. Let the markets actually digest those figures. It's just manipulation, right? Cutting any longs out by pushing it down here. And then pushing up as well as cutting shorts out. See this little spike just above. There would have been a lot of short stop losses. So they're clearing up some room. Yeah, there you go, straight into that zone. So it could be the case that we start rebounding from here. Dollar index has absolutely fallen through the floor. So patience pays off.
We'll have Mike drop in here as he gets more information, particularly on those key ratios. Long ago and far away,
But
we used to worry
this
about
is good. Okay, we got some more volume coming in, some more orders. Always good to see. So let's see how things kind of react here. It could be the case that we just push a little bit deeper into here. See some more supply being dumped, and then bam, absolutely floor it. Got the dollar index going into that zone here. So let's see how things kind of react here. Could be the case that we rebound. Massive wick on the bottom and then start structuring right back up. If we see that reaction, that strong reaction here from the buys, then that's your signal to get in short and we're turning back around, right? So let's see how things kind of plan out. Now, obviously, it's the third month now that we've had falling or declining CPI. That's exactly what the Fed wants, right? Okay, but the issue or the problem at hand isn't solved, okay? You still have high interest rates. That's arguably are still yet to run through the economy and still see the actual full impact of these high interest rates, right? Especially in the housing market, okay? So there's worse days still to come, so bear that in mind. And we're starting to see that reaction straight into that zone, just as we said, okay? It's exactly what you want to see. So have a look on the lower time frame, see what we're getting. Okay, structuring right back up.
But I think the answer is, why is Jay Powell going into the details? Because it's the mechanics of inflation that has them worried. Inflation is embedded in the persistent part of the basket that households consume.
Massive shake-up. Huge shake-up.
Powell keeps mentioning that. It shows up in all those speeches. And in some sense, yes, we got an inflation report as we expected. We also got a reminder that the labor market is running pretty hot. From the Fed's perspective, aggregate demand has momentum. That's putting pressure on resources. That will put pressure on wages and therefore on prices. Maybe not this month on prices or wages, but the mechanics are there.
Okay, so whilst we wait for the markets to do their thing, okay, should actually, I mean, dollar index has seen very nice bounce. Very nice bounce indeed.
Looking at the core
Just need things to start pushing.
You take out the owner's equivalent rent and rent of shelter, and it is
bear with us. Let's see if we can get any positions here.
basically 25 basis points, which is a little bit higher than that BLS number that we gave earlier. Rent of shelter rose 0.8, which is more than last month, and it rose 0.8 in terms of primary residence, which is the same as last month. And then owner's equivalent rent up 0.8. A tick higher than the prior month. So we're still seeing the impact of higher home prices and higher rents in the CPI report, which is what Jay Powell's trying to take out so they can get a cleaner read on where core inflation is.
The dollar weakness, the market story of the day, without a doubt. Equity futures just about unchanged on the S&P 500. In the bond market, you've got this drop away, just falling away now at the front end of the curve again. We're down 5 basis points on a 2-year to 4.17.
Where are we going?
They're looking to hike again over at the Federal Reserve. This 2-year keeps on rallying. Your 2-year, 10-year spread still about 66 basis points, so no real drama.
Very nice reaction. Very nice reaction.
Dollar yen briefly breaking through 130 with some yen.
Let's get rid of all of this anyway.
It's now 1.7%.
So, came into that zone, just tapped into it, where we said there was that stronger liquidity area within that wider range. So was the concentration, and we got that reaction. That's exactly what we want to see. Now we just want it to close with a very nice wick on the bottom. So we've still got 18 minutes, likely to just wait it out, see what's happening. A little bit of structure is going to come into here potentially.
They're doing the best they can, and it's actually pretty conventional. Inflation has a number of parts to it. John Williams talks about the inflation onion. We've gotten the good news on the outer shells. Commodity prices off, energy prices in particular off a lot. Next shell in, goods prices are doing good. Supply chains have mended. Market economies work and shift resources around. They're worried about the core. They're worried about the inertial part of inflation that is importantly gets embedded into contracts that are written at different times, and so it's.
I mean, the sell side's definitely come in, hasn't it, on the low time frame?
Has built, and they're worried it's going to take a while for it to come down. So yes, I think markets got what they expected, even though they were hoping for good, even better news. Don't try to get between a rally and reality. But the reality is, Ed's looking at the details, and the details are supportive of 2 of the 3 planks to the story they rely on. There's momentum, slack, maybe not so much right now, wages and prices, but the other 2 things are the reason you were
Hey, thank you, Vince, as always. Equities down about
By the way, those that are liking the stream, thank you very much. Always a pleasure, always appreciated. Does help with getting some people in here that don't necessarily follow us. So yeah, thank you for that. See what we can get here. I mean,
yeah, which matters. I'm sorry, Mike Wilson's nailed this at Morgan Stanley. This time it really matters.
We'll see. Hey, Mike, that was great. Thank you, Mike. Appreciate it. Mike McKee's going to join us at the top of the hour.
I'll stay with Todd too.
You're going to stick around with Tom?
Yeah,
That's kind of you. Okay, I'll see you in about 20 minutes. Hey, Tom, that was great.
Yeah.
A lot of people messaged me this morning, wanted to know what was in that tank a little bit earlier on.
Oh, yeah.
I send you the corks from New York. This is Bloomberg.
Swiss aperitif.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In Ukraine, fierce fighting is raging in a town in the Donetsk region. Ukrainian military officials say that Russian attempts to capture Soledar are failing. It's located just 6 miles from the strategic city of Bakhmut, and capturing Soledar would be a symbolic victory.
right. What I wanted to have a look actually was.
Steps to counter the growing challenge posed by China and its ties with Russia. They announced plans to strengthen defense cooperation on land, at sea, and in space. The U.S. plans to reorganize its forces in Japan so it can deter and respond better to increasing regional threats. More than 7,000 striking nurses at 2 New York City hospitals will return to work today after reaching a tentative deal. Union leaders say the workers at Montefiore Medical Center and Mount Sinai Hospital will see pay raises and improved working conditions. The strike began Monday morning after 4 months.
Go on, all that we want is a very, very nice topple over in prices. That would be fantastic.
Powered by more than 2,700 journalists.
Wild, yes, wild, wild, wild.
I'm Lisa Mitchell.
Always happens on CPI, especially with the current market conditions. Aussie Shark in the house, you alright, my man? How you doing? Yeah, let's see how things kind of play out. It's going to be a bit of a longer stream. In fact, we might take it over for the Discord channel and test that live trading room out. Yeah, we'll see. Feedback on my audio, yeah, it's the news. Is that better, Charles? No, okay, bear with me, let me change some settings up here now. I know why. Bear with me, I know why. It's because I've got my mouse on charge, so it's not my actual mic. Bear with us. Is that better? Should be better now. It should be better now. It's just because I had my mouse on charge, so I had to unplug the mic. No. Okay. Right, let me go into settings. Even worse. Yeah, bear with me. I'm just going into settings now. Is that any better? Yeah, so I switched over. So I was talking through the mic on my iPhone to this actual mic here. So I'm just switching up the settings. So let me know if it's any better. Let me check my phone. Yeah, let me know if this is better. Whereabouts it needs to be set. Is it better now, or let me know? Better, yeah. I had two streams on. I'm sorry. Oh, okay. There we go. Okay, I can turn it back up now. Let me know if anything needs changing. But yeah, perfect. Okay, perfect. I did not have my mic actually plugged in, so I mean, yeah, at least that's sorted. At least we got it back up and running anyway. Okay, perfect, guys. Yeah, welcome all of you to the stream. Beautiful. Obviously, CPI, we got it out. Came in weaker once again, but yeah, I mean, we got that instant reaction straight down. Cut out some of those longs. And basically squeezed both sides of the coin, right? And I was setting up some structure, looking like we're going to push up higher from the current structure on this lower time frame, yeah. So it could be the case that we make a little bit of a deeper push into this order block here, and then things start to push back down. Dollar index has gone into this zone perfectly, so a nice reaction here. So it's now going for seconds, tapping into some more liquidity. So yeah, we'll keep a close eye on things here. What ideally we want to see is, well, kind of what we got here, a nice wick on the bottom. So once we get that reaction, okay, and we start seeing things start to build up some positive structure to move back up on the dollar, then we can start thinking about potentially getting in on some short positions. But for now, we'll just keep an eye on things, really. The market as a whole is overextended, okay, so yeah, it's not really worth getting in on any longs unless it's kind of those kind of trades or the setups that are on the verge of a breakout and already have been accumulating all throughout today, building up on that long term, on that buy side volume, sorry. Yeah, and there aren't going to be many of them. We haven't scouted out any of them. And again, yeah, there's not going to be many of them because a lot of them have already done their move on obviously this push up in Bitcoin prices. So yeah, we'll keep an eye on things for now. Let the market digest. Obviously, we've still got New York open to come online. So 37 minutes out. So we'll wait for that. See how things are reacting there, right? Yeah. Once New York comes online again, between New York and European close, we should start seeing the actual direction of the market. Yeah. Well, I can push this back up now anyway. Yeah, let's see. There's going to be, I mean, if the market does turn around, it's going to be a very, very, very nice push back down, okay? Very fast push down as well. So, could be the case that we get in somewhere. I'm probably looking at 18,500 maybe, right at the top. Build some structure and then just absolutely just crush all of those gains through. So we'll keep an eye on things. These are altcoins because they've moved up so much that if you can get a good position, okay, at this top, things are going to push down heavy. So we'll see. Got some profit taking happening, so things are starting to turn around. Okay. See, ApeCoin's got some nice sell side already coming in. And again, guys, if you, just scan through these altcoin charts, they're all very much overextended at resistance. So this next move is going to be a nice one.
Tell me about the ageless comments from Harkin, and also, Mike, what you see in this historic inflation report.
Well, Pat Harker is joining the crowd that says 25.
Shake up.
The numbers today justify that with a 1/10 drop on a month-over-month basis in December, pushes the headline number down to 6.5%. So on the path.
Look at him. Yes, I shall indeed.
Looking at apparel costs, and everybody thought maybe we'd see a discount on that, but they're up 0.5% because men's clothes went up. Almost all of women's clothes.
Yeah, so again, this is looking like it's going to push up higher. This is exactly what we're talking about in terms of those that are on the verge of a breakout. So, yeah, this one's obviously pushing up very, very nicely. It is at this kind of larger order block. However, if we pull a fib from top to bottom, 618 is perfect with that zone there, 13. So that could be a potential target there. Two targets, 1 and 2, 12.5 and 13 exactly, would be two targets to go for. Now, I'm not really interested in getting in long right now. Yeah, just because, it's a very overextended trend right now. So there's more room for it to come down than to go up. So, yeah.
Prices of Schlumberger and that at Tiffany. Are you kidding me? The articles are nuts.
I literally walk around saying, take the price up, it'll create demand.
That's good. Dana Telsey, thank you so much. Our economic report from Telsey Advisory Group today. Please stay with us. Markets all over the place. They lift. Futures up 20. Good morning.
Thanks, Alex. It was very helpful. Thank you, mate. Thank you very much for joining me. And yeah, we'll come back online a bit later on for that New York close. Obviously, markets will have digested some of this data by then and actually kind of push in the direction they want to take things. Yeah, we're coming deeper. But even though dollar index excuse me, has made this huge move down, Bitcoin hasn't really done much. Okay, so normally when that happens, especially as dollar index is now at strong support, it's more than likely to start wicking on the bottom and start finding that support, okay, and start pushing back up. Once you start seeing the turnaround, okay, especially when Bitcoin hasn't really done much, it's going to push down heavy, okay, because the reaction once the dollar index finds support is going to be a big one, especially after this huge move down that's had. So it's just a case of seeing where could potentially find that turnaround here. Coming up to that 0.5, it's got 618 there as well. Yeah, so keep an eye on things, see how things kind of play out, and then we'll go. XCN. Let's have a little look. Yeah. Just watch for now. Is it on? Yeah. I mean, bloody hell, what's happened to this? It's gone. Yeah, this is horrible. I wouldn't touch this at all. Even though it's basically all-time lows. There's just no volume. No volume whatsoever. Sometimes it can mean that you can get a very large move in price. Find a little bit of a slowdown here. Majority of that previous wick on that high time frame has been filled as well. Got a nice reaction here. Yeah, I don't know. Maybe start accumulating here. So, for now, hold off. Wait for a little bit more structure. Getting closer towards here. If you start seeing, obviously, that structure kind of build up on a trend line like this, then you can get in on one of these entries here, or even on the breakout for a push up higher. But yeah, just watch it for now. But it's got potential, especially as it's all-time low, but there's no volume at all. So it's high risk. Nice shake-up, very nice shake-up. Just need supply to start being dumped on the high time frame. So I'm going to look at the equities. Equities are now at resistance. Nasdaq at its order block. S&P at its trend line. How will it react? Both S&P and the Nasdaq. Well, the S&P is just beneath its order block, whereas the Nasdaq is at its order block. I mean, there's a little order block here, which is currently at. So, I mean, it's pushed past kind of where the majority of the volume was. Yeah, I mean, that's the talk around town now, isn't it? It's the 25 basis point talk. So, we'll see. Looks like dollar phone support. You're right about lack of buyers to take momentum. Yeah. What about XMR? XMR was something that we actually had our eyes on. Where was it? Here it is. Yeah, we had our eyes on XMR actually. Let's have a look. I mean, a fantastic run as well. Very nice run indeed. Let me get the. get a little bit more price action on this. Let's get rid of all of that.
We're seeing a ton of dollar weakness as well. Euro dollar reclaiming a 108 handle, 108.22. Euro dollar positive by 0.6%. With us now, pleased to say, TV's Priya Misra
Yeah.
of Bianco Research. Priya, first.
I mean, we're at this order block here, so again, finding a bit of resistance here. Much stronger resistance all between here, really. So it could be the case that we get a breach, push up there, spike, and then come down. But yeah, currently, obviously, holding this level of resistance. This is a nice structure here, so we could actually get a very nice move on XMR.
The much harder part is getting that service inflation down consistent to 2%. I think the market thinks that, they can extrapolate this trend and then the Fed has maybe one or two more 25 basis point hikes. I think the Fed may have to actually continue to hike. So our call is 5.5 for that terminal rate. We're calling for a 50 in February. I mean, maybe that's a 25, but I think the Fed's going to say we're not done, right? I think the market's a little too optimistic, extrapolating that this decline in service inflation will continue. And historically, service inflation is very sticky on the way down.
Jim Bianco, are you on the other side of that argument?
Not really. I think that what the market should be focusing on as we go forward from here is where do we go next? Okay, inflation peak, 9% was the high. That's the easy call. It's very obvious that that's happened. Are we going to 2% without any kind of intervention like a recession or anything else to dampen demand to get us down there? Or, as Mike McKee just pointed out, do we bottom out somewhere around 3 or 4%, the 3 and 6 month averages that we've seen? Is that where we bottom? Because if that's where we bottom, that will be unacceptable for the Fed, and that they will not be looking to pivot or they won't be looking to slow down the rate hikes. Yes, they'll move 25 basis points in February. That has been priced in for a month now, that it would be a 25 basis point.
We've come all the way to the bottom of that order block now.
But I think the narrative and the attention should turn to how far down.
Oh no, we haven't. Oh yeah, we have. This one here. This is the wider order block though. So anywhere between there could be support.
Just how much demand destruction you still think we need to get inflation to where the Fed wants to see it?
So I think we need a lot more demand destruction, particularly in the labor market. I think businesses are hoarding labor. Wages did come down a little bit last week, but you used to look at year-over-year wages well north of 4.5%.
Right, so we are 22 minutes out from the New York Open. Okay.
Data right now, and that data on the labor market does not suggest that demand destruction. How forward-looking can the Fed be to say that
This could be a very good manipulation opportunity for the markets. Okay. Continue pushing up. There's going to be a whole load of retail longs here. Whole load of them. We could just get a nice fake out on the top. Bam. Sell side supply dumped and then just absolutely crush those balls out. XRP, yeah, XRP does look nice for a short. Yeah, we had it for a turnaround relatively soon. Yeah, I do like an XRP short. It's not really moved a great deal compared to other alts. And we're currently obviously still within the structure. Could see that we just spike up, test that 100 and then move back down. But yeah, still holding on some nice structure here.
You mentioned what's happening right now. Neil Dutcher of Renmark is pushing back against these recession calls and talking about what he thinks is happening right now. Financial conditions are now easing and have been for a couple of months, supporting economic growth right now. Instead of long and variable, I think the lags are short and predictable. Jim Bianco, your thoughts on that? The fact that some people think we're actually seeing a re-acceleration in the US economy.
Yeah, there's plenty of evidence to suggest that initial claims this morning at 205,000, and there really isn't a lot of evidence that the economy is.
I like.
We need to see more demand destruction in labor. I want to say we need to see any demand destruction in labor right now, because 3% 2.5% unemployment, 205,000 in initial claims, and still printing 200 plus thousand for payrolls every month. That's not demand destruction at all. And if those numbers continue to move forward from
Seeing some nice support. See how far this green candle will go. But yeah, it's just being patient. We want to see some structure, hold in, and then continuing up, back up. Do you know what I mean? Something of the sorts anyway. At the moment, yeah, it's just trying to find its support. So it's not really worth taking at anything right now.
above 2%, and that's an uncomfortable question for Wall Street right now.
Mike McKee mentioned Patrick Harker a few minutes ago, leaning towards a 25 basis point hike over the Philly Fed. He says this, though, in response to some questions in a Q&A, favours rising rates a bit above 5% and then pausing. Now, to your point, Priya, if we take the Fed at face value, they're not cutting interest rates. But I think the problem at the moment, Priya, is that I can't find many people that are taking the Fed at face value. Can you?
Yeah, I think that when you listen to the Fed, all they can sort of tell us is
RNDR did make a nice move down.
I think where the debate in the market
Could be the case they'll be just drop off a cliff here. Some nice structure.
in terms of how quickly they're
So
decline. Look at the tips market. Markets pricing in 1-year inflation
this could be a nice short. Just want to see some more supply being dumped here.
as a good thing, but the market's pricing in well below that. So I think the market pricing in these cuts is not so much second guessing the Fed reaction function. It's saying that the economy might be much weaker, that inflation might be much weaker, and so the Fed will have the ability to cut rates because inflation is back down. I think the uncomfortable question, to Jim's point, is
some nice reaction from the dollar there. Very nice reaction indeed.
a much higher rise in the unemployment rate, closer to, I would say, 5%, which we're very far from, before they can respond. So it's really this tension of
Just want to see. I mean, we got some nice sell side. Some very nice sell side indeed.
just as we couldn't quite forecast how quickly it would rise. I think the market's saying we've all got
Just want to see some more sell side come in, some more supply being dumped. And then I think that will be enough for me to take some of these short positions.
How much does that complicate the outlook?
Oh, I think it complicates the outlook a lot because while China is reopening, zero COVID is gone, the mobility numbers are showing, like the transit numbers, that people are getting out of their house and finally moving around. What does that mean? Wall Street wants to think that means, 2019 is coming back. Everybody's going to return to the factory and we're going to make iPhones.
See how things kind of react here. So maybe come down here, hold, bounce, test again. That'll be some nice positive structure, and we can potentially start looking at some shorts once we kind of reach this point here, and then continue back up.
Experience some kind of a fundamental change, so that just penciling in a return to 2019.
But let's see.
2019 production rates, because zero COVID has been lifted, might be a little bit premature. Yeah, they're going to reopen, but we don't know what the composition of that's going to look like, and that does complicate things.
Have you got a base case yet, Jim, or is it still too early?
I think it's still
Revenge on AVAX. Yes.
production numbers that everybody's expecting.
I mean, on the higher time frame, I mean, it's done a very, very nice move.
The world's going to suck everything in.
Very nice move indeed.
Push up those prices. Out the backside is going to be a bunch of finished goods, which is going to help to further depress core inflation. That's been the narrative for the last few months. I think that probably the first half is going to unfold, but the second half, as far as the massive amount of finished goods,
That's nice. I like that.
China's listening to everybody else, where the world's going into
Alright,
recession. They're not
let's
going
go.
to be able to really crank up production as hard as we think or hope that they are. That might disappoint a little bit as we move forward.
Just a final word on China, please.
So one of the things I'm watching is on the stimulus front. I mean, if China's opened up, how much are policymakers there going to put in terms of fiscal stimulus, credit easing? Remember 2015, massive amounts of credit easing, then was a global growth positive. Our view is it's going to be more targeted, it's going to be more targeted as opposed to a global growth surge. But I'm certainly watching those credit numbers. And if that starts to ramp up, I think it takes a big tail risk for the economy out, and that can explain why, we're talking about financial conditions are easing, or because China is going to be this growth engine due to easing? I think it's still early. We're watching both fiscal as well as credit easing measures in China to see what the global growth outlook, what China growth outlook will be beyond just what's happening in the US, which I think a slowdown is at this point in our view, we have a recession baked in for the second half of this year.
Producer Jubienko, sticking with us. Equity futures right now fading just a little bit, still positive by 2 cents of 1% into the bond market, where we have got this rally at the front end of the curve, running right the way through the curve, but particularly on the 2-year, we're down about 7 basis points on the 2 years, to about 4.15 in the FX markets. And dollar weakness for you, euro dollar just in and around 1.08. Coming up, another call inflation.
Alright. We've got 3 trades about to be sent into premium, okay? So just be at the ready. I just want to see a bit of a turnaround here. If the dollar's able to hold this level and continue pushing up, then yeah, I'm sending them in. So just be ready. If not, then yeah, we wait. At the moment, it's holding. Alright, let's go.
We also got a reminder that the labor market is running pretty hot. Aggregate demand has momentum. That's putting pressure on these.
Let's see where we can go with them.
This was the biggest political headache facing this administration, especially heading into those midterm elections. And now they can really breathe a sigh of relief of where gasoline prices are going. But we should note he cannot claim victory too quickly. One, on gasoline prices, because whether it's Pierre Almiron or Will Kennedy in the last hour with you and Tom talking about oil prices, they are expected to go up. So potentially it's too quick to really claim that victory on where gasoline prices are going in the future. And there's also other factors in this CPI report, like shelter, like recreation, like clothing, that is going up. But overall, this is a good sign for this administration.
Can you tell me what the plan is to refill the SPR and Anne-Marie, and how much the China reopening complicates that effort?
Well, now that you see prices much higher, Jonathan, it's going to be incredibly difficult for the administration to refill the SPR. They want it really below $70 a barrel, and we are already above that. And when you have Pierre Onderam and you have Jeff Curry talking about prices north of $100, that is not going to mean a refill of the SPR anytime soon. And China obviously is the biggest question mark on this in terms of how higher oil prices will go, and then thus gasoline prices. Because if we have a quick and clean reopening of China and they start consuming a lot more, and you can see the trend of just automobiles on the streets in Beijing and Shanghai start ticking up higher, then that's going to mean higher oil prices and less of a fact that the U.S. is likely going to want to refill that SPR anytime soon.
AMH, thank you. Down at the White House, we'll hear from the President of the United States in about 40 minutes' time, scheduled to speak at 10 a.m. Eastern Time. Prime Minister Jim Bianco back with us. Jim, I want to talk to you about the fact that we came into this year waiting for this growth slowdown, and all of a sudden people are starting to pile in to long EM equities, long European banks over the last 6 months. The copper trade starting to deliver in a massive way. 9K, Goldman talking up 11.5 maybe at some point this year. Looking at high yield spreads on the screen right now, the wides of last summer were 583, we're at 420. Credit spreads are rallying. Jim Bianco, makes sense of that as we discuss the possibility. Priya's talking about the potential of a recession in the second half.
Well, let's start with the most powerful drug on Wall Street, and that's mean reversion. That when you show a bunch of professional managers markets that are down a lot, their instinct is to bet that they are going to rebound to revert to some kind of a mean. So a lot of what you're seeing, as you mentioned, just to pick one, European banks. European bank stock index is at the same level it was in 1987. There has been no movement in European banks for 35 years. So the 30% rally that we've seen in them since July is more, I think, in the mean reversion camp. So there's a lot of that going on in the market too. Second of all, the narrative on Wall Street has always been a weak first half, strong second half. So to take a word from the recent past, everybody thinks that the weakness is going to be transitory, and that it will give way to a second half strength. So look past whatever weakness we see, look past whatever...
All right, let's see if we can get continuation back down. I mean, dollar's definitely built up on that nice structure that we were talking about. See if it can continue. It's finding a little bit of weakness here, which is fine, but this structure here is quite nice. So let's see if it can continue pushing up. I mean, it's had a few attempts to push up now. Tapped into a very nice amount of liquidity down here at this concentrated zone within this order block. So yeah, we could get a nice reaction back up. So could also be the case that we push up, come back down. Prices in crypto push up as it comes down, sets some structure, and then goes for the larger move back up. If that's the case, then probably potentially look at maybe adding a little bit more margin here once it finds its new support, and then just ride it up. So yeah, we'll see how things kind of playing out. Looking good for now. I mean, this is coming back down. See how well it holds off. We do need to start seeing some of that supply really being dumped, but I mean, this is a very nice shakeout. Got a double top forming here as well on the 15. As you can see, 1 and 2. So let's see where it can take us. Does look like maybe this wick is going to get filled up as well. But yeah, we do also just need to be relatively careful as well with this, with these trades. Let's see, it's up into this order block here, as you can see. So we get a little bit of a turnaround here, as the dollar is also making a little bit of a push down here. See whether we can hold. It'd be nice if we can just hold this level and then start accumulating again, making the next push up. So we'll see. Right, 5 minutes out from that New York Open. 5 minutes. I'm very glad that Ethereum's turned around, to be honest. Just for our long-term positions. I should find some sort of resistance soon, hopefully. Make the next move. Still very weak buy side on that lower time frame as well. Still very weak buy side. So that needs to start ramping up. Da, 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 da. Right, give me 2 seconds, guys. Be back in just a second. Right, let's have it. What's happening? Okay. Nice. Right, New York has gone live. So, let's see what it brings. Dollar index is going to set up some structure here. So, crypto is also going to do that. I mean, equity is kind of holding. S&P's made a move back down. What's the Russell saying? Breach.
Equity futures off the back of it, just about positive by 0.2%. Putting together 2 days of gains coming into Thursday. Camel mentioned 3 on the S&P. As we're opening down, switch to the border, get to the bond market. Yields shaping up as follows on a 10-year yield in America. Down 3 or 4 basis points, sub 350 a little bit early this morning. 350.41 right now. The high of last year, the 10-year peaked at 433 back in October. We're way below that level now by more than 80 basis points. The FX market, euro dollar, hello, 108, 108.19, 108.20 on euro dollar, up 6%.
Excuse me.
Crude right now approaching 79 on WTI, 2 percentage points on the session. That's the cross asset price action. About 30 seconds into this one, we advance about a third of 1% on the S&P. On the Nasdaq, up a third of 1% also. One stock to watch at the open. It's Disney, the company facing a proxy war with activist investor Nelson Peltz. For more on that, here's Abby.
Hey, John. Well, yeah, it looks like it's going to be a battle, and with the stock higher right now, up more than 2%, suggests some shareholders and at least one analyst on Wall Street agree with Nelson Peltz's view. Now, they, of course, did this morning, Trion Management, file a preliminary proxy statement urging shareholders, other shareholders, to support his nomination.
Let's go, baby. Let's go.
Vanguard, BlackRock, State Farm, Newport, Royal Bank. Now, currently, Trion Management has a roughly 900 million stake. That would put them right around 22 or 23. So a pretty big shareholder there. And they are criticizing a number of factors right now. First and foremost, they really want a Bob Iger succession plan put in place. They're also talking about excessive compensation and the fact that the company has perhaps overpaid for some assets, including some of those 20th century Fox Media assets. Now, relative to paying for them,
Let's get it.
This could be another issue. Right now, Disney's long-term debt about $49 billion. So relative to the stock, though, this is another issue brought up in that preliminary proxy statement. Since its peak, it is down, and this came as a surprise to me. It's down 50%. I mean, it's really pretty incredible decline at this point, so it's going to be interesting to see how this plays out. And Nelson Peltz is known for having won some of these proxy wars in the past. They're not for the faint of heart, and it'll be interesting to see whether or not he convinces other shareholders to allow him to be nominated to the board.
Brutal 12 months. Abby, thank you. I started the show by saying no fireworks. You want some fireworks? You want some price action? Bed Bath & Beyond. Monster move. Have a look at this. Up by 15%, and have a look over the last 3 days as well. Katie Lyons, explain this, please.
I wish I had a good explanation for why fundamentally this was happening, John, but it has indeed been remarkable. This 15%, actually now 17% gain today would be the smallest we've seen in 4 days, a 4-day period in which we have seen the stock rally 200%. It was up 69% yesterday alone, a record day of gains, and really for no good reason, considering last week this company warned it was maybe going to have to file for bankruptcy. Then we actually got results from it this week that showed a wider loss than expected, the company attributing part of that to its inventory struggles because suppliers have lost trust in the company's ability to make payments. Sales growth also has been floundering. So do fundamentals really support this rally whatsoever, John? The answer is yes. Attribute some of it to a short squeeze, given that short interest in the stock has been rising and is now about 52% afloat. But mostly it just seems like meme trader behavior is making a comeback because this has extended beyond Bed Bath & Beyond. We've also seen gains in the likes of AMC.
There's your structure. So let's see if it can continue. It might be the case that we have to get out, but I mean, dollar index is making that nice push up. Yeah.
Down more than 60% in the last 12 months, John.
Bed Bath & Beyond up about 20% right now. Katie, thank you. 3 or 4 minutes in then, about unchanged on the S&P, almost negative now on the Nasdaq by about a tenth of 1%. Some good news for the airlines after a rough couple of weeks. American Airlines beating estimates in its prelim results on robust holiday travel demand. Ed Ludlow, these numbers pretty impressive.
Yeah, they are impressive. If you take the group as a whole, that group of US-listed airlines, they're on track for their 7th straight day of gains, which would be the longest winning streak going back to August of of 2020. I like some good news at this time in the week, Jonathan. What's interesting is what the story is here. The EPS range for the fourth quarter, $1.12 to $1.17, almost double what the street was forecasting. Again, these are prelim results from American Airlines, but what they're talking about here and the story is there was demand over the holiday period, which is interesting because we're kind of trying to get a sense of how the consumer's doing right now, but there is some specifics within that, which is these are not big corporate accounts and business.
Mate, dollar's going. Come on, continue.
Medium-sized businesses, along with that leisure travel that's boosting the airline. But again, a strong.
Right, Bitcoin's at this level of support here, so we kind of do need to start breaching through. Ideally.
As always, you will hear from the President of the United States, scheduled to speak in about 25 minutes' time. We've had a tweet from the President of the United States just moments ago. The President saying the following: for the 6th month in a row, yearly inflation is down. It might be rising in economies around the world, but it's coming down here, and gas prices, food, and more are following. Of course, there's a political lean here. That adds up to a break for families and proof that my plan is working. You'll hear from more from the President in about 25 minutes, as I say. The third straight month of cooling inflation then is what we're focused on here. Jonathan Gold of Credit Suisse turning his focus on what it means for earnings. Inflation coming down means companies lose pricing power. Even though we don't expect a recession this year, we do expect earnings down 3 to 5% in 23 compared to 22. I'll give you the opportunity just to reflect first of all on what we heard in the inflation report about 50 minutes ago.
Alright, we are officially risk-free. So let's see where we can go with this move, really. Continuing to look bearish. That was its attempt to push up, failed. Kind of, we do need to see a breakthrough here, realistically. I mean, the dollar's still on an absolute tear. Let's see how things can react from here. If they start to push up, we'll get out, cash in.
There's a little bit of noise, but bottom line, this is really good news overall in terms of the strength of the consumer. So, John, I think BofA are looking at the same thing you're looking at. The equity strategy team expects margin compression in 23 amid demand uncertainty and a tougher pricing environment. But they said this, and I know you've thought about this, and that's why I want to ask you. They said still inflation wasn't a universal EPS positive. Where can you find that margin improvement in 23, John? You know, we have earnings coming down this year from something like 221, 223, something in that range, to 215 without a recession. So we're not doomsdayers on the economy, but we think that margins are going to be under pressure. Margins are relatively high broadly, but here, if I kind of look at this employment report and see where's the real big issue, is that wage growth right now is advancing faster than overall inflation, which means companies, the wage growth is going to be their expense, and the inflation, which is their pricing power, is coming down, and if companies have to pay out more to employees and have less ability to pass that on. Last year was the opposite. Everyone thought the companies were going to get squeezed by higher inflation, and that was the opposite. They got huge pricing power. This year it's going to be a little bit more challenging, which is why, even though we don't think we have a recession, we think profits are going to be incrementally lower. John, earnings season starts tomorrow morning. BofA, JP Morgan, next week Morgan Stanley, and we'll hear also from Goldman Sachs as well. Can we just talk more broadly about what you're expecting in earnings season and just where it compares to, say, expectations at the moment? Is the bar low enough for you? And where is the bar low?
Alright, guys, we're going to get out of these positions now. Get out, we cash in. Oh, yes, we do. Alright, nice. We're out. We're all cash in there. Beautiful. I'll take it. I shall take that happily. Yes, we will.
The majority of them
to the upside overall. So that's going to be one big theme. And second big theme have been a source of downward revisions, meaning that the earnings estimates for tech companies have been falling a ton. And in the last quarter, not only did they fall a ton, but then they missed the lowered estimates. And we actually think that that's going to continue, that tech is in kind of a sour patch, if you will, for several quarters. Now, on the other side, even though the price of oil is down, over the last 3 months or so, and yes, wheat prices is down over the last 3 months or so, the energy stocks, their earnings, their expectations are ripping.
All right, beautiful. I'll take that happily. Let it do its thing now. Let it run.
So, John, let's just build on that. If tech can't regain leadership and last year's winners, energy, can maintain momentum, that's going to leave the
I'm happy with that.
isn't it?
Yeah, I think, Jonathan, so first of all, what was in the index from an earnings perspective, we think the numbers are going to be down. But we just did some research on this, that the majority of the years that when earnings are up, the multiple contracts, or when earnings are down, the multiple goes up. As odd as that actually sounds, last year the earnings weren't great, but they were okay, and the market was terrible because
All right, beautiful guys. Yeah, 350% over 3 trades is more than enough. I am happy with that. Very, very happy. Yeah, let it build up some structure. We'll go again. Yeah. Just not seeing enough sell side. I mean, we got a nice move, but it's going to find support soon. So yeah, thank you very much for joining us. And we shall touch base with you later on for that New York close. But yeah, enjoy the rest of your day. Cash in on some nice profit. So yeah, we'll run with it. And then kind of go again on the next move. Also, just bear in mind, guys, I mean, it is Thursday. We've got one more day left of the trading week. Okay, so try and get into the habit of closing your positions before Friday or by Friday. Yeah, normally, obviously, volume just completely tails off. So, yeah. But yeah, cashed in. Very, very nice. Let's see where things are at now. Yeah, they're finding support now. Get in and get out. Quick time. That's what you want.
We move on pretty quickly from CPI. The next stop for this market, of course, is JP Morgan tomorrow. Bank of America earnings. Then on to next week, we'll hear from the likes of Morgan Stanley and Goldman.
Beautiful. Okay, perfect, guys. Thank you, and we will touch base with you later on. Cheers.